We're talking markets with Tommy Grisafi from Advanced Trading, ATI ProMedia. Tommy, first of all, appreciate the chance to connect once again.
Absolutely, Don. Always fun to do this.
It looks like we've got some heat building in. In this month of August, we always say August is when we make that bean crop. We're filling pods. What's that mean to us as we look at the marketplace?
It's going to be interesting because many of the places where the heat's coming in, they've recently had some rains, but these are extreme temperatures. Will they just be there for a day or two and go away? I'm not quite sure how it'll affect it, but any time you start talking above 100 in August and hot and dry, that's going to have an effect on the markets. Now, the USDA did have that bean yield a little lower, but they also pulled back on the demand. So what the bean market's trying to figure out here is, are we losing yield, or did those rains, because the USDA number was based off of August 1st, a lot of beneficial rains came after that. But this heat is real. Looks like it's going to sweep through just as the Pro Farmer Crop Tour is coming through. So you're going to see a lot of people taking pictures, sweating next week, and we'll see if it affects the overall health of the crops.
Obviously, every year the Pro Farmer Crop Tour gets attention because it's a perfect time of the year. We can get a better gauge of what's happening. We actually have boots on the ground. Guys are out there pulling down and looking at the ears and seeing what we've got for pod counts. How does that usually translate through the market week? I'm curious how that works.
We usually start on the first night of the crop tour, that Monday when the Eastern Belt comes through Ohio and Indiana. The Western Belt, I forget where they are that first night. But as they start the tour, I think they're in Nebraska, that we
Yep.
usually, it feels bullish, but I don't know that it'll be that way because Ohio's had some beneficial rains. Indiana, we were dry in the spring. We picked up parts of Nebraska, have had some great rains. We'll see. Oftentimes we start bullish in the beginning and then we sell off late into the week, and then they release the results usually Friday, right as the markets close.
You mentioned the western leg of this. It starts in Sioux Falls and gets that corner of southeastern South Dakota and then into Nebraska for the next 2 days to start off that crop tour. So you get that kind of feel. You really think about it, it's a pretty core area. That southeast corner of South Dakota, Nebraska, of course, all of Iowa, and then they skirt through the southern half or portion of Minnesota too.
Yeah, it's nice. There's always people wish we can go up to North Dakota or elsewhere, but I hear you'll be doing a crop tour next week. You want to talk about that a little bit?
Not next week, the week after that, the last week of the month. Each year we go out with Pioneer and take a look at the crop. We get a gauge of where we're sitting as far as corn and soybeans, as well as canola and sunflowers across this region as well. So we're very diverse and get a chance to check in on that crop. So the week of the 28th, it'll be our Red River Farm Network crop tour presented by Pioneer.
Of course, I have to say, if you're watching this video, subscribe to the Advanced Trading YouTube channel. Also, if you're watching this video and you like Don Wick, subscribe to the Red River Farm Network YouTube channel. There's lots of good content on both.
Let's talk interest rates if we can. It seems, I think I saw mortgage rates this week hit levels we haven't seen in 20 years. It feels like that gas pump is edging higher once again. What are you seeing as far as the general economy?
Well, the Walmart CEO was out this morning and Walmart had earnings. Earnings were good, but then he came out and said, but he really sees things getting tough moving forward. People have used a lot of their savings account. They've dipped in their credit cards, credit card debt over $1 trillion. There's two economies, right, Don? There's the I'm going to the Taylor Swift concert and I don't care what a ticket costs, but I'm bringing my family. And you could see literally as Taylor Swift travels around America that hundreds of millions of dollars come into town with her. That's not a joke. It actually it's affecting economic data. The Federal Reserve can actually see, it's called the Taylor effect. Now, that's one part of the American economy. Then there's the other part that's like, I don't know how I'm going to pay my rent, buy food, and fill up my car. And I've already working several jobs. I don't know if I could work another one. There's two Americas out there right now. One's pretty nice if you're going to Taylor Swift concert, but the other American economy, that's the one. And when the Walmart CEO, if anyone knows, no one sells more stuff in America than Walmart. So take a little canary in the coal mine message there, that they're seeing these headwinds and those interest rates are starting to eat at people, and they're going to eventually eat at the American farmer.
Tommy, China's been a big driver behind the global economy for some time. There's a little trepidation of what's happening with that economy as well.
Yeah, I like to watch copper, and when I think about China, I like to watch copper prices and other various metals. They're in a different position because they stayed on COVID lockdown so long. We know that when you halt things and lock things and try to control things, it has an effect. They eventually just lifted everything up. They had the virus spread everywhere. A lot of people got it 3 6 months ago, and that had an effect on their economy. A different set of economics in China versus America, but yes, they have slowed down. They're trying to grow. China is actually stimulating their economy, which, if we did that here in America, would create additional inflation. So as we start to pull these economies in, giving everybody money is just going to make the very thing you're trying to stop, inflation, get worse.
Tommy, I've been out this week, a couple of field tours and those kind of things, and the conversation comes to wheat. It seems like this wheat market can just not find its footing at any point at this venture.
Sure. Well, we have our Ukraine problems; those are known. It is harvest. We typically see harvest pressure. Typically, not lately. These last few years, last 4 or 5 years, haven't been typical since COVID. But when we come into Fargo and go to the Big Iron Farm Show, markets are usually moving on down. Now, I do believe last year, maybe even the year before, when we were at Big Iron, the markets had already bounced. But this time of year, these next few weeks, we tend to make seasonal lows. And this is very typical to have a wheat harvest and have pressure on wheat.
Soybeans, it looks to me like the soy oil has been kind of leading the complex. What's behind that?
You're seeing strength come out of palm oil. You're seeing strength in canola. That's coming from Canada's still very much affected by this drought. So when I think of Canada, I look at the oat market. They've had a bid to them lately, canola market. We're not necessarily seeing that spring wheat bid, but as we learn more about the Canadian harvest, and even though if their crop's bad, they still have selling pressure. Keep an eye on what's going on in Canada, and that'll give you a better idea. As far as the bean oil, yes, we are leading there, and we grow a lot of beans. That this yield, this talk of yield, it's a big deal if it's 52, 51, or 50, because our carry out, our stocks to usage is still so low and so tight in beans, Don.
Because corn and soybeans basically energy crops as well. Does the crude market focus in on that as well?
It does, and I focus on the crude, number one, because I filled up with gas today and I was shocked. 410 for the cheap stuff, the affordable stuff here in Valparaiso, Indiana, and with 4 vehicles on the road, my little fleet, we noticed the credit cards get dinged a lot for gas, and that's just another tax on the consumer.
Talking to our growers, a lot of folks are in that break-even type of position, and we've been at that for a bit here. How long can that be sustained when we take a look at agriculture?
Well, we're coming through one of the greatest periods ever in agriculture. A piece of farm ground just outside of Quincy, Illinois, traded for over or exactly $30,000. Now that has potential to build homes and other things, but there was like 8 tracts that were sold yesterday, and incredible prices still for farmland. So the wealth effect of what's happened from multiple years of course, land going up, prices going up, a lot of wealth was created in the ag economy. But I guess the question, and I can't answer it because I can't look in that camera and say everyone's books. The question is, and I'll ask the question, we can end it on this: how many years can you, the American farmer, go with just breaking even, making zero, paying all your bills, and not even having the money to pay your bills, just that the farm breaks even? You still owe the money for your health care, you owe the money for your day-to-day living. How many years can your farm break even and not really start to pull down or tug at you financially? That's going to be the big question. If I look at the corn market for multiple years and the bean market for multiple years, it looks like we're going into that type of structure in the grain market.
Tommy, if folks have questions, tell me how can they get in touch with you?
Yeah, go to Advanced Trading website. Of course, give us a call, 1-800-664-4383. Appreciate everyone watching. Of course, we ask you to subscribe to the Advanced Trading YouTube channel and look to this station for a lot more information like this, Don.
Exactly. Tommy Grisafi with us, Advanced Trading, ATI, ProMedia.